Unshakeable by Tony Robbins. In many of our past book summaries, there's been a lot of emphasis on investing in liquid assets such as stocks, mutual funds, etc., but there will likely be periods of economic uncertainty and volatility when unpredictable nature of economic conditions, which can impact financial markets, investments, and individual financial well-being happens. So now, imagine never having to fear a stock market crash, a recession, or financial uncertainty again. In Unshakeable, Tony Robbins reveals how anyone, no matter their income, can build lasting wealth and financial peace of mind. His message? The market will always rise and fall, but your mindset, preparation, and strategy can make you unshakable. We're going to break this book down in parts and make them understandable as you listen. Please pay attention. Part 1. Becoming unshakable. The power of financial certainty. Tony starts with a simple truth. Wealth isn't just about money, it's about freedom. Financial freedom means you're no longer worried about paying bills, losing your job, or sudden downturns. You have enough and the confidence to live life on your terms with little or no interference. Part 2. The mindset of the unshakable investor. 1. The market always recovers. History shows that no matter how bad a crash gets, the market has always recovered and reached new highs. If you panic and sell during a downturn, you lock in your losses. The wealthy? They see downturns as a sale on great investments. It's a great time for them to add to their portfolio by buying more at lower price because they're aware of this one thing. The market always recovers. 2. Avoid the financial news panic. Media thrives on fear and anxiety of the listeners, so they propagate it. Headlines are designed to make you feel urgent and anxious, so you keep watching. Unshakable investors ignore short-term noise and focus on long-term strategy. Short-term noise can keep you in a long-term penury. Sometimes it gets you stuck in the valley of indecision. You neither move forward nor backward due to fear. So, avoid the panics that result from financial news. 3. The biggest risk is being out of the market. If you try to time the market, you'll likely miss the best days. And missing just a few of those days can drastically reduce your long-term returns. Stay in there, stay invested. No shaking. Part 3. The core principles. Principle 1. Asset allocation. The single most important factor in your investment success is how you divide your money across different asset classes. Stocks, bonds, real estate, etc. Don't put all your eggs in one basket. When one basket breaks, the others keep you going. Principle 2. Diversification. Even within each asset class, spread your investments. Own shares in many companies, sectors, and countries. Use index funds or ETFs to make this easy. Principle 3. Reduce fees and taxes. High fees silently kill your returns over time. Choose low-cost index funds. Be smart about taxes, use retirement accounts, and think long-term. And like we have suggested in past book summaries, use the service of an expert if this is something you're not directly knowledgeable about. Part 4. Your step-by-step wealth plan. A plan gives you direction and helps you to get to a destination faster. Step 1. Save more. You can't invest what you don't save. Automate your savings so money is invested before you even see it. With that, you don't have to think too much to the point of hesitation. The hard works of thinking and distribution are being done through automation. Step 2. Invest regularly. Use dollar-cost averaging. Invest a fixed amount each month, regardless of market conditions. This will make you consistent and as well remove emotions from investing. Step 3. Build a sleep-well portfolio. Have a portion of your investments in safer assets like bonds so you don't panic during downturns. This balance allows you to stay calm and invested. You have other things going for you, which help you to not focus all your attention on one thing that is on a downer. Step 4. Prepare for crashes. They're not if, but when. Robbins says to expect market drops every few years and see them as opportunities. Stay calm and even buy more if you can. Will crashes happen? Yes, they will. Price will always go through 3 cycles. Uptrend, where price is going up, consolidation, when price is taking a pause and downtrend, when price goes down, otherwise known as crash. However, having the knowledge of these things only help you to neither be too excited when price is going up, frustrated when it is consolidating, nor panic when crashing. Step 5. Have an income plan. If you're retired or nearing it, know exactly how you'll withdraw money without outliving it. Robbins suggests the 4% rule, withdrawing 4% of your portfolio per year. Part 5. The psychology of true wealth. Tony emphasizes that real wealth isn't just money. It's peace of mind, health, relationships, and contribution. Money is a tool to improve life, not the end goal. This psychology will 1. Help shape your mindset, because your thoughts, beliefs, and attitudes shape your perception of wealth and success. 2. Shape your values. Aligning your actions and decisions with your core values is crucial for true wealth. 3. Make you live by purpose. Living a life of purpose and meaning gives you direction and fulfillment. 4. Live a life filled with gratitude. Focusing on what you already have, rather than what's lacking, cultivates a sense of abundance. In conclusion, ensure you reframe your mindset by shifting your focus from scarcity to abundance and from fear to opportunity. Set clear goals by defining what true wealth means to you and create a plan to achieve it. Invest in yourself by prioritizing personal growth, learning, and self-care. Cultivate meaningful relationships by nurturing connections with others and build a supportive community. And lastly, giving back. Find ways to make a positive impact on others and the world around you. By understanding the psychology of true wealth, you can create a more fulfilling and purpose-driven life that goes beyond just financial success. And back to the market. Stay in the market. Don't try to time it. Diversify broadly to reduce risk. Keep fees and taxes low. Expect downturns and embrace them. Focus on what money can do for your life, not just the number in your account. Financial security isn't about predicting the future. It's about preparing for it. By building a resilient, diversified portfolio, staying invested, and controlling your emotions, you can face any market storm without fear. That's what it means to be truly unshakable. If you enjoyed this summary, share, comment, and subscribe for more powerful financial book breakdowns and start your journey to financial freedom today.